Hey, what's up, you guys? You're going to love this episode where we bring on a tax professional, a CPA, to talk about all the things that network marketers try to talk about when it comes to taxes when they're talking to new prospects. He answers those questions. He tells you what to really do. He tells you the expectations and the mentality that you should have when you're having that presentation or attempting to have that conversation. And Dr. Pietsch jumps in as well and talks about why you just really shouldn't have that conversation. It was a great episode. We had a lot of fun recording it. Appreciate you guys hopping on as always. Can't wait for you to hear this one. Check it out. Hey, what's up? And welcome to the AIN Networker podcast. This podcast started because myself, Dan McCabe, had a question. The question was, how do you build a big team fast in network marketing? So I asked a good mentor of mine, Dr. David Pietsch, who is a Hall of Famer, 250,000 customers in his downline, tens of thousands of representatives, and he just started spilling the beans. Started telling me everything, not just what worked in the past, but what he is doing in the future to really grow and build his business. I said, hey doc, this needs to be a thing. And he's like, what do you mean? I'm like, we're going to turn this into a podcast. So here it is, the secret straight from his mouth into your ears. Whatever we can do to help you and the industry grow is what we're here for. Let's go ahead and jump right in. Let's get started. Hey, what's up everybody, and welcome back to the AIN Networker podcast. So here again with Dr. David Pietsch and another good friend of mine who I'm going to introduce here in just a moment. But excited for this topic today, Doctor. We're going to talk about taxes and network marketing. How exciting is that? We're going to talk about taxes today.
Let the good times roll. I'm going to go back to bed.
Yeah, right. It's it's one of those topics that it doesn't get talked about enough. And at the same time, within the world of network marketers, when it does get talked about, a lot of times it gets talked about incorrectly. And beyond that, the people that talk about it have no business talking about it. So what do you typically tell network marketers, Doc, that want to talk about, hey, you should sign up for my business opportunity because you're going to get these tax benefits?
Well, the first thing I say is don't do that. Because they're not qualified to do it, and you can just get yourself in all sorts of trouble. So right. I don't let my team touch that with a 10-foot pole. It doesn't mean that it's not true, because it is absolutely true, and it's something that I think, Dan, you've been around me a long time. I say that having your taxes done properly by somebody that costs an awful lot of money is probably the single best financial decision you can do for yourself, because you just can't mess with these people, because it jacks up your life. It takes way too much time. It's way too stressful. The penalties are way too high to do it wrong. And what's even higher is when you have people that are doing your taxes like yourself, or somebody that's cheap like H&R Block, that ends up costing you hundreds of thousands of dollars over your lifetime, because they're really not qualified to do the job in the first place. So to answer your question, I just don't like my team talking about it at all. But, again, obviously, we all study Robert Kiyosaki, Rich Dad, Poor Dad, the cash flow quadrant. We want to move on to the side of being a business owner, because there is tax benefits there. So that's why we've got Preston on today, the tax genie. He is going to answer all these questions for us.
Yeah, absolutely. And Preston, we're going to get to you here in just a second. So you don't have to think of a specific example, Doc, but has there ever been a time where you've been watching somebody on your team present and they go into the tax dialogue a little bit, and all of a sudden you're like slumping back in your chair, just like, ugh?
Yeah, I usually don't slump in my chair. I usually stand up and start walking towards them at a very rapid pace if I ever see that. So again, as we were talking off air, I just do not let that happen, because we have got such a good thing going. I've built such an empire. I am a professional. I am not an amateur. So I know what the regulators are always looking for. They're always just looking for anything you're doing that's not compliant. And it's just not compliant for the masses of people to talk about things that they're not qualified to talk about.
Right. And that is why we have a platform like a podcast where we can bring on people that are qualified to talk about it. So with that, all right, quick introduction for you here, Preston, is that I met Preston a little over a year ago at an event, and it's kind of funny. I mean, I believe we even met in the bathroom, or like by the bathroom.
And now it's a party.
He heard me talking about some of the stuff we were doing with the program that I had, working with kids and talking about money, and I had my son there, and he told me what he did, and we ended up connecting again later. He's got a tremendous story of his career and how he took his own life back, but he is a licensed CPA. And through everything that's been going on, during the pandemic that we're currently still involved with. I see him going live on a regular basis, and he's always staying up to date, current on all the information that is out there. And he is a true professional when it comes to taxes. You know, before we hopped on air here, he said he could talk about taxes all day, every day, which, you know what? That is the mentality we need. So, you know, before we start diving into some of these, I've got some network marketing specific tax questions that I want to ask you, Preston, just on what people can expect. But why don't you, well, first of all, thank you for being here. And then tell us a little bit about your story and how you came to be where you're at now in your career.
Yeah, thank you. So, man, my story, it's a doozy. So I won't get into all of it, but I mean, 7 years ago, I was working for somebody else, and I kind of just realized that I was billing 10 times what I was getting paid. I'm like, okay, I think this is a little off. I approached my boss about it, and he's like, yeah, no, we think you're overpaid the way you are. So I left and started my own business. And within a year, I was making 3 times what I was making there. And so I had a little, at first I kind of did the normal CPA route, going and doing personal taxes, doing a little bit of anything and everything for everybody. So if you had $1, I would take it. Like if you needed payroll, I'd do it. If you needed bookkeeping, I would do it. And then about 5 years ago, my son was born with 6 congenital heart defects. And about a year, when he was about a year and a half, on tax day, he was having open heart surgery while I was at my office working. And I said, okay, this is not right. I need to reorganize my priorities in my life. And so I ended up selling that business, kind of taking a step back for a minute, reevaluating what I wanted to do. And what I've been doing for the past 2 years is basically 100% tax planning, where instead of just doing individual returns, I'm sitting down with professionals, sitting down with entrepreneurs, sitting down with business owners, and finding ways to save them money. And there's so much opportunity that people are missing. Like David, Dr. Pietsch said, people overpay taxes in their lifetime by hundreds of thousands. Sometimes that's not even over a lifetime. Sometimes that's in a single year. I've helped some people find $250,000 in a single year in overpaid taxes. And for some people, I'm able to get some of that back. For some people, we're finding that going forward. And so it's taken me in a different route, but it's been an adventure for sure. I called somebody last night and told them about a little tax strategy because of COVID. And they're like, do you just read articles about taxes? And I'm like, well, yeah, kind of. That's what I do. So this is my life. I love taxes. I love talking about it. I hate paying them. I hate my clients paying them. And the strategy is what really gets me going.
Yeah. So it's like, you know, just like network marketing and business in general, it's almost like you kind of gamified it a little bit. You set up challenges for yourself and you just want to figure out how to win the game, right?
Yeah, for sure. I talk about that with clients a lot, where I look at the tax code as essentially, yes, a game that can be beaten. And I call myself the tax genie. If you guys remember Game Genie from the 80s and 90s, when you plug a game into like Zelda or something, it gave you all the cheat codes. I call myself the tax genie, giving people the cheat codes, the legal cheat codes to the tax code.
Oh, see, I beat Legend of Zelda on, you know, the regular rules and terms. So
never could do it.
So cool. Well, I'll go ahead and get us started off here, kicked off anyways, with some of these questions. And I actually had some questions sent in to me from network marketers that I know. I did a live yesterday asking for questions. And then I had some people, we sent out an email and got some questions. But, you know, one of the big, I don't even want to call it a misconception, but people get into network marketing looking at it like they're starting their own home-based business. And in a sense, they kind of are, but really they're becoming a sales rep for another company. They're an independent contractor for another company. Sometimes they set up as an LLC, sometimes they don't. And that LLC becomes the representative for that company. And sometimes, you know, they get told about, well, you start your own home-based business and you're going to be able to write off your cell phone, your internet, miles on your car, all this other stuff. And people tell them things that they shouldn't be talking about anyways. But what are some of the tax advantages somebody can take advantage of if they're currently just a W-2 employee, a regular employee, and they do start some kind of home-based businesses? is there some advantages that can be there for them, and how do they actually qualify for them? Because I know you can't just like sign up and then be like, well, I'm just going to sign up with no intent to ever actually do anything and write a bunch of things off.
Yeah. So you have to have the intent to profit. The intent to profit is what changes everything. So, personally, the new tax code under Trump basically got rid of any deduction for employees whatsoever. So if you were a W-2 based employee, there's almost no deductions out there for you for work. So you can still have your charity, you still have your home interest, but other than that, and a couple of other things, there's basically nothing. And so by having a home-based business or having a business of some type, it does allow you, with the intent to profit, it does allow you to write off a lot of those things. The big tax benefit is not in being able to get this massive tax deduction. It's being able to generate income and get as much of it tax-free as possible. That's where the big benefit is. And it's being able to convert some of those expenses that you've been paying for into tax deductible items. Now with like your cell phone or miles, it's a percentage. And so you are going to have out-of-pocket expenses for those, but they can be then deductible and you can get some of that income tax-free. But the big hinge is the profit motive. If you're in business to profit, you can deduct all those things. If you're not in business to profit, it becomes a hobby and then you lose everything.
Right. And you said one key word in there, intent to profit. Say they have intent to profit and they fail profiting.
Yeah. No, it's profit motive. Are you trying to profit?
Okay. How do you
that's the key.
something like that?
What's that?
How do you prove something like that?
So there's two ways. One is you're automatically qualified if you have profit 2 out of 5 years. Okay. 2 out of 5 years automatically qualifies you that you have intent to profit. The other way is if your actions show that you are trying to make money. It's if a reasonable person would walk in and look at your situation and see if you are trying to make money, then yes, you're trying to make money. And it's just essentially at that point, to be completely honest, I've never seen it go against a taxpayer when they have said that they're trying to profit, if they can show that at least they are doing something to try to make money. Whether or not they actually make money, that's a different story. But the goal is the big benefit in home-based businesses is not to get the big write-off, it's to get the tax-free income. Like there are so many ways to make that income and then keep it. And a lot of times I hear people saying, oh, if you become a home-based business, you're going to get a big tax write-off. You're going to get a big tax refund. It becomes a benefit. That blows my mind because they're spending money or they're taking those expenses that they're already spending and just writing them off. And they're getting the benefit from the taxes by showing a loss. Whereas if you look at it from the other way and you say, okay, I want to make as much money as possible. Now tax planning, help me keep as much of it as I can. Okay.
Right.
That's the big benefit. When you're self-employed, when you are making 1099 income, there are so many ways to keep your income and keep all of that instead of just giving it either to the government or giving it to expenses. So.
Right. It sounds like the big narrative here is, and you can jump into if you want, Doc, but the big narrative is that when you get into a network marketing business, you need to go into with the intent of actually making money, and you need to go into it with the desire to actually build a business. Like the desire shouldn't be, the sales point shouldn't just be, hey, sign up for my business opportunity because you can get a bunch of tax write-offs, which happens.
Horrible pitch.
Yeah.
Okay? Because essentially you're pitching, hey, let's get you to lose some money. That's
right.
what that pitch is. Right?
Lose some money and write off some other money.
Yeah. Whereas if you go at it from the other direction and say, hey, let's see if we can help you find an extra $20,000 to pay for some of those things. And then it's, hey, you're saving $4,000 or $5,000 versus, hey, let's help you make 20 grand or more. I mean, most of my clients that I work with are making hundreds of thousands of dollars a year, and then I can save them 20 or 30 or $200,000 a year. But if you're, But the big thing is make as much money as possible, and then with tax planning, learn to keep as much of that as possible.
Right. Makes sense. Any thoughts on any of this, Doc?
Well, I just think it's fascinating, that, even in your own story, you had a job and you weren't getting paid what you were worth, and you realized that you needed to strike out there on your own and make things happen, and you get paid more money and you have control of your life. And, that's just what we do in network marketing. And you're exactly right. I mean, it's not about tax savings. It's about, okay, I'm going to be truly an entrepreneur, and as a business owner over the lifetime, you just have more flexibility with your money. You have more control over your money when you're a business for yourself. So I love your mentality. This is why we don't let the people who don't really know anything about this talk about it, because their come from is exactly wrong, just like you're talking about.
Yeah. Yeah, they come from.
Can I ask a question, Dr. Pietsch? I'm guessing you paid taxes on your network marketing income last year, right?
Yeah, go ahead.
Did you pay taxes on your income on your network marketing income?
Hey, what's up, you guys? It's Dan. And I want to take 30 seconds to introduce you to networkerpro.io, because right now they got a free 14-day trial going on. If you've learned one thing listening to Dr. Pietsch and myself, it's that systems and automation are the way to build a big team. The way to get the big whales on your team is to have proper systems and automation in your business, and Networker Pro can do that for you. You can build all of your websites, your lead generation funnels, your email automation. It's a complete CRM. The calendar is built right into it, so you don't need to integrate with a different calendar. It is all right there. And right now you can go test it out on a 14-day trial for absolutely nothing. So I'm really excited about it. I'm fortunate that I was able to partner with some developers and have them build a software that became the backbone for what I believe is the #1 network marketers tool out there on the market today. All right, let's get back to the podcast.
I'm guessing you paid taxes on your network marketing income last year, right?
Yeah, go ahead.
Did you pay taxes on your income on your network marketing income?
Yeah.
Did I?
Yeah.
Yes.
Yes.
So you didn't get a tax break because of your network marketing income, right?
All I can say is literally when we started this podcast, I got an email from my CPA regarding taxes. So number one, I can assure you that I am paying big dollars to these people. And all I'm trying to do is keep as much of my money as possible. That's my only thought in my brain.
But a lot, when I hear people say, oh, go into network marketing for a tax break, my brain explodes. I want to scream. The goal, I want you to pay a ton of taxes.
Amen.
Now, I want to come in and help you so you don't pay the ton of taxes and you make $1 million. And instead of paying $300,000 in taxes, you keep most of that. But the goal is to make as much money as possible and then keep as much of it as possible. Whereas if you're a W-2 employee and let's say on W-2 you make $100,000 versus a home-based business making $100,000. On W-2, they're going to withhold all that money. It's gone. There's nothing you can do about it. Whereas if you're self-employed, there's so many things you can do about it to keep it instead of just giving it away, giving it to the government or going out and spending it. But there are so many ways for you to keep that money instead of just giving it to the government. So the goal is to make as much as possible and then try to keep it.
Yeah. Struggle to find the write-offs because you just have too much money. So.
Oh, there's all sorts of stuff.
I know. I'm sure that there is. So it's interesting. I mean, we took a turn here a little bit than what I thought we were going to talk about, and really just the message is really just telling people to be like kind of more upfront with this, and that the goal is to make money. Sometimes network marketers, I see them go into presentations, and I've seen people in the organization do this, Doc, where, they make it a sales point, like get into network marketing because you get those tax breaks. They have no idea, but they're really coming from a place of trying to help you like save a little bit of money, as opposed to presenting to the person from the aspect of like, let's help you make a bunch of money.
Yeah.
And from there, we're going to be able to show you some really cool things on how you can keep more of that money as your own business, as a home-based business. Now, let me ask you this, Preston, because I kind of mentioned it at the beginning. Is there any benefit if you're just a one-off network marketer? Is there any benefit to signing up under your own personal name versus an LLC, or forming an LLC and having the LLC represent you? as the sales rep for that company?
So it's all about liability, but so having a single member LLC versus just under your personal name, it does two things. One, it gives you flexibility for taxes later, because if you're an LLC, you can be taxed in any of the 4 different ways: S corp, C corp, partnership, or sole prop. Whereas if it's just in your name, there's nothing you can do. And so if you're an LLC, and all of a sudden you have a massive year where you think you're going to make 20 or 30 or $50,000, and all of a sudden you make 150 or 200 or more $1,000, which I've seen people do. It allows you the flexibility to choose to be taxed in a different way later. And that can be huge and critical in tax planning and tax savings. I've literally seen people, because they're an LLC, even after the fact, a year later, be able to change and save $20,000 just by changing how they're taxed, nothing else, and keeping $20,000 instead of giving that to Uncle Sam. So that's a big benefit. It allows you the flexibility to choose how you're taxed, even up until a year later. And that also provides a slight liability protection. But for the most of the time, I've rarely seen that as a benefit, the liability protection in network marketing.
Yeah, I'm guessing the answer is going to be it depends, but a lot of people start out with their own personal name, and at some point, you can always make the switch. You can always, sell or transfer your position to an LLC that you own.
Yeah.
Is there a particular threshold, making 50 grand a year, 200 grand a year, to where people should start really considering something like that?
It really depends on your personal situation. I have people that are making $200,000 that I still have them on a Schedule C, and there are people making $50,000 that I have them on an S corp. And it depends on your personal situation and what a lot of my clients that are making more than $200,000 or $250,000, I actually have them set up with a combination of entities to get the benefits of the S corp, the benefits of the Schedule C, and the benefits of the C corp. But it really kind of depends on your personal situation, and it's a really tough question to ask.
I know.
Really.
I gave you the answer before I asked the question. Even
it depends. Well, that's the answer with almost every question in the tax world. Is it depends on your situation.
Right. No, absolutely. This. I want to give you an opportunity here too, and I told you when I asked you to come on here that I'm more than happy to let you, talk about what you do a little bit within tax planning for other people. Dr. Pietsch said it kind of early on that it makes a lot of sense to overpay for tax planning. Pay an amount that you feel is kind of gross for a CPA because they can save you so much more. One of my old favorite lines from when I first got into entrepreneurship was somebody told me not to step over the dollars to get to the dimes. And sometimes that's just exactly what we do. So, we're not done by any means yet, but since this just seemed like a good spot to do it, why don't you talk just a little bit about what it is that you do for people in the it depends situation, and then feel free to throw a website or something if you want to on here as well, and we can certainly put it in the show notes.
Yeah, for sure. So what I do for people is tax planning. It's this. I talk about because when every person has a different situation, and every person has a very unique tax life. Even two people that might look the exact same from the outside. I dealt with two people that literally worked at the same company. They were both on W-2 and both on 1099 for the same exact company and made very similar amounts. And yet we used only one strategy of the 12 that we used between the two of them overlapped. And because their lives were separate, one was married with kids, owned their house. The other was renting, was single, had a lot of medical expenses. And so all of a sudden their lives were so different outside of just the facade. So what we do is we take an in-depth look at every single person we work with on their entire tax life and optimize their tax situation to their tax life so that they pay at the end of the day, both of those two people, we got $40,000 of tax-free income to them. So 100% of their 1099 became tax-free.
Okay.
And so, but we just went about it so differently. And so that's what we do. We individualize a custom tax plan for each client. entrepreneur that we work with. We don't work with W-2 employees, only entrepreneurs, and generally when they're making 6 figures or more. So if somebody wants to book an appointment, my calendar is anderson.tax/schedule.
Okay. All right. We'll make sure to throw that in the show notes as well. Just so people can get in touch with you if they're interested in learning more about that service, because it makes a lot of sense. All right, I had a good question. I was just reading some of the questions that got emailed into me here, and I like this one. So, at the end of the day, network marketers are sales representatives for a company that sells a product. And they earn some kind of commission. They build a team. They become a sales leader, earn overrides, and all that kind of fun stuff. This question was, can I write off my product purchases?
Once again, it depends.
Okay.
It depends on what it's used for. If it is used for yourself, to test it out, to understand how it's used, probably the first time or two, 100%. Yeah, absolutely. If it's used as an ongoing basis, probably not.
Right. So if you're in a nutrition company per se, you can't write off all the protein powder you buy. Necessarily.
Unless you're in bodybuilding and are putting it on, going to shows and stuff and doing that kind of thing. But yeah, there you go, Dr. Pietsch.
So there could be that. But, one that's a little more near and dear to our hearts, if you're in if you're representing a travel company and it's a travel club membership and you use that membership to travel the company events.
100%.
The company events are 100%, but the membership you use to get to book through, maybe.
Yeah. Yeah. If you're using that for business travel, then absolutely 100%. No question.
Yeah. So
how about I go to Bora Bora? Can I write that off? Can I go to Bora Bora and make that a business expense because I'm in a travel business?
So the rule of thumb when you travel, if you're working at least 4 hours a day, then every day is considered a write-off. And then you can write off the entire thing.
That's what I was curious about. And actually that was a question. I'm glad you brought that up, Doc. That came up last night when I was doing my Facebook Live, just asking some questions about this topic. But yeah, so it's 4 hours a day. I mean, you kind of answered it. The question was
weekends don't count, by the way.
What's that?
Weekends don't count.
Oh, weekends don't count?
Nope. So if you have an event Friday and Monday, you can be there Friday, work 4 hours, play Saturday and Sunday, work Monday for 4 hours, and then the entire thing is written off.
Oh,
there you go. That's what a great answer.
That's a good answer. Well, yeah, it's the way it got brought up last night was, say I travel to Disney World and I'm walking through the park and I talk to somebody about my product. Can I write it off? So
that's a little different. That's a little different.
But it's like a really meaningful conversation. We talked for like 20 minutes.
So I'll tell you this. So I wrote off a ski trip to Wisconsin this summer, or not this summer. Good night. In January of this year.
Yeah,
feels like a decade ago. But yeah, so what we did was we went with another family and we got the hotel to pay for our ski lifts because otherwise we can't write off the ski lifts. So we paid a little bit more for the hotel. The hotel paid for the ski lifts. We went up there, had a 4-hour meeting in the morning from 5 to 9. And then we went skiing the rest of the day, and 100% of our travel and the ski lifts were completely deductible.
Yeah.
Because we had a 4-hour meeting for that one day.
Nice. Good to know.
Yeah.
So it's kind of sad you're taking ski trips to Wisconsin.
I thought it was pretty cool out there. I didn't even know they had hills.
Yeah, there's some good hills. Not a ton, but there's some good ones. I'd prefer to go to Utah or Colorado, but
Right. No, I know.
I'm in Chicago.
Right. So yeah. So it's close. I've been to Christmas Tree Mountain outside the Dells before.
Okay. So. Yeah. We were in Cascade, so not too far.
Yeah. Good. All right, man. I think we got through a lot of these questions that we had for you, and I think that this podcast, Doc, is going to be one that gets listened to almost more than any one that we have, because frankly, your team, network marketers in general, they need this information. So I think we're going to put it out there a lot. The training people how to prospect, how to invite, how to close, how to build your belief system. It's all fun and good stuff, but like this is like real stuff, and we just can't talk about it. And even as leaders, and Doc is a leader, like you just can't talk about it. I mean, what do you normally do when people come to you for tax advice, Doc?
I give them the name of my CPA.
Right. And that's like all we can do. And it's great to have a reference here. I mean, if nothing else, this podcast becomes a reference, and maybe off air, Preston, I'm going to talk you into maybe creating a reference for one of our members' sites or something, just so people have a place to go and they can get these questions answered. But we can't answer them. You know, all we can say is like, well, my CPA kind of sometimes says that it might work like this, but you got to call your CPA, and really I shouldn't even be talking about it. And like, it's just a weird muffled conversation with no good factual information. So it's awesome to have you on here and actually speak as a CPA. Thank you for getting that license.
Yeah. So can I tell you, have you ever heard of the parable of the hot date and your mom?
I have not. Doc, you heard it?
No, but I'm excited to hear this one.
Let's
All right.
go.
So when you're going to get a mortgage brokers hate guys like me, right? They hate me because when I work with entrepreneurs, we find all sorts of ways to write off everything in the world. Okay. So when I was single, when I was going on a hot date, and if the girl asked how I was doing, my answer was always, I'm doing great, right? I am just killing it. I'm on top of the world, flush, right? And then I get home or call my mom and say, hey, she'd ask how I was doing. I'd say, Mom, I'm destitute. I'm poor. You gotta send money, or they're gonna kick me out of my apartment. I need money, right? So it was this dichotomy. To the girl, I'm always doing great. To the mom, hey, please send money now. It's kind of like the mortgage broker and the IRS. The IRS comes a calling. You're saying, there's can't squeeze blood from a turnip. There's nothing here. But the mortgage broker is like this hot date where you got to say, I am flush. I've got all sorts of cash. The problem with being able to write everything off and write off all of these things is it takes the mortgage broker, and all of a sudden they say, yeah, we can't do it. This isn't good. You're broke, right? Mm-hmm. But there are a few deductions where you get to write them off for the IRS, but add back for your mortgage. And so they're not, they're basically your company pays yourself and you get to keep the money. Mm-hmm. So a lot of my clients is what we do is we'll find $60,000 or $70,000 of these expenses and pull them out of the business into their personal account. And then for when they go apply for a mortgage, it's no problem because we can if their income is really 200,000, but we're showing 100, we can add back all of these items and the mortgage broker loves it. Okay. So it's the hot date and your mom. Okay. Right. But the problem when I hear people talking about network marketing as, hey, you're going to get this big tax benefit. If you're writing off all these expenses and showing a loss, when you go apply for a loan, it's disaster. People, mortgage brokers absolutely hate it. And you're not likely to get a loan by doing that. So,
yeah. And, we're recording this August 2020. Things are crazy out there right now. I was talking to my banker this morning, and this has nothing to do with anything other than it was shocking. But they just wrote a 30-year fixed mortgage for another client at 2.5%. They wrote a 15-year at 1.78 or 1.78.
That's insanity.
It's bonkers what's going on out there right now. So pay your taxes so you can go qualify for these mortgages. Dang it. No, but I remember once upon a time, I've been an entrepreneur my whole life. And I remember there was a point within our real estate business, because we had this real estate investing business, and there's write-offs all over the place and like deductions. We own a bunch of rental properties, and we were so aggressive with it. We weren't showing incomes anywhere. And finally, like one year we were like, we need to show more money because we need to, we just need to do it. But my CPA's advice at the time was basically just don't write off some of this stuff, save it for later. And it seemed like the wrong advice, but I didn't know any better. So.
Yeah, I don't ever tell my clients to pay taxes. I help them find ways to show the income without paying the tax.
Yeah, sure. So that makes
Preston.
Yeah.
What did you say?
I said I like you so much.
Well, you guys can have this conversation later, but it's all very good stuff. And I love this topic, and I definitely, I want to do a little more Q&A on this stuff and this topic. I feel like this word could get spread so far out there. And there's so many people that come into network marketing too, and they make good money. But a lot of people that do really well in network marketing have absolutely, I mean, no offense to those of you listening to this, no business sense at all. And like when it comes to this kind of stuff, and really they need to do it. I mean, how many network marketers have you seen through your 13 years of your company, Doc, that went and actually did well? They broke through some of the thresholds. They made good money, and they didn't even save money for tax. They just spent it all. And then they're in tax trouble a year later. You have to have seen that.
Yeah, 1,000,000%. This is why I just hammer people that, you have to understand that your taxes are your biggest expense, and you have to learn how to legally minimize them. And again, this is why you've got to find people that are professionals. The best thing that Preston said on here today was you have to have the mindset that you're going to go out there and you're going to win. It's not about deductions. You're going to go start a business and become a real entrepreneur and run a real business and stop, this employee mindset that you came from. Okay, you're not doing that anymore. And you can build an empire like I did in network marketing, that has built, a massive fortune. So you have to start to think differently, think like a business person, and learn this stuff.
Yeah. So you said you've seen that as well, Preston. But Preston, like I wanted to buy something in October. I figured I'd have the money back by January. Like people have to have done that all the time.
Yeah, never, not once.
No. See, that's not true, because I know when I was 22 years old, I did it. So
yeah, I'll tell you, my biggest turnaround case was actually my wife.
Oh, yeah.
When I met my wife, she was on 2 installment agreements with the IRS because she made a bunch of money and never paid her taxes, and she was self-employed. Yeah. So in our first year of marriage, I tax planned the crap out of her, and instead of paying all that money, we got to keep it. So.
No, nice. Nice. Good for you guys. So that makes a marriage strong, right?
Yeah.
Yeah, I just remember back when I was like 22, working as a real estate agent, however much money I earned, I spent it all. And then I got the tax bill, and I'm like, I don't know how to pay that. And then it's like extensions and scrambling, and it was just dumbness, compounding dumbness. But, that's how some of us learn. People listening to this don't have to learn that way, because we just told them what to do. Yeah. So for the standard newbie entrepreneur, network marketer, somebody going out there and they're making money, would it be a smart thing to say they should set some aside for taxes? If so, how much? Or what would you tell them to do if they're getting 100% of their commissions right now and nothing's being held back?
So, I mean, once again, it depends on their situation. I have clients that are making money where we're setting aside 35%. I have clients where we're setting aside 5%. Okay. Yeah. And it depends on what you're willing to do to actually keep that money from a tax perspective. So there are some loopholes and things where you get to just pay yourself and keep it. And so essentially you can, if you're making basically less than $50,000, there's no reason for you not to keep almost all of that money.
Yeah.
Okay. There are so many ways for you to I'm not talking just going out and spending the money on business expenses. I'm talking about finding business uses of that money to pay yourself and keep it. Okay. Sure. And there are a lot of ways to do that. But if you're going to make some serious money, I don't really have a good rule of thumb, because it's all based upon where that person's income is and what else they're doing to tax plan. So if there's no tax planning going on at all, and they're in the 22% bracket, you got 15% FICA, you got 3 to 5% for the state, and then 22%. So call it 40% that they should put aside if they're not going to tax plan.
Sure. Okay. No, it's a reasonable answer, and I think people need to hear it. And I know we know the general population of people that get into network marketing and where they're at in their lives, and they're in that ballpark. You get a handful of professionals, you get a handful of people that already have a substantial daily income or day job income. But a lot of the people are they're looking for something else because they need something else. So, and they're looking to add to their life that way. So, all right. Well, I think I worked through most of my questions. You got anything you want to ask me?
I covered a lot. I think it's good. Again, it's just stuff you got to learn, guys.
Yeah, 100%. So, all right, Preston, I'll give you the final word here. What What do you have? Anything else you want to give your link again here one more time, or any other thoughts?
Yeah. So I'll just leave people the best thing you can do for tax planning, honestly, is get organized. No spreadsheet accounting, no bank account accounting, but actually having some type of system to keep track of your income and expenses. The first thing I do with new clients is we just make sure that they're organized. That's getting QuickBooks or Wave Apps or Xero or some type of accounting software in their life, and separating their personal and their business expenses, because my goodness gracious, if everything is mixed up, there's no way for you to actually figure out what is business, what's personal, without spending hours and hours and hours. And even when you do spend those hours, almost every single time there's something wrong. You're missing something, some nature. So
yeah.
Number one thing that I tell everybody to tax plan, the first thing you got to do before you even tax plan is get organized. My website or my calendar link is anderson.tax/schedule. And I offer a free strategy tax assessment for entrepreneurs and at the end of the hour, we can generally nail down about how much they're gonna save by going through a tax plan, and they'll have a couple of ideas that even if they don't decide to work with me, that they will save money after that call.
All right. Well, that's awesome, man. I appreciate it. And the whole getting organized thing, like, that's a whole nother episode, and maybe we'll have to do that one sometime.
Yeah, so, it's a big one though.
Yeah, if you're up for it, we'll do that one again. So, all right. Well, thank you so much for jumping on, Preston. It's always good to talk to you. So thanks for being here. For everybody else, you got some value out of this show, I would appreciate it if you could share it. Hit the like button, subscribe, rate it, review it, do all the fun stuff. And we'll be back here next week. So appreciate you guys as always. Till next time. Hey, thanks for listening to the All In Networker podcast. Dr. David Pietsch and I greatly appreciate it. If you receive some value, or you know somebody that will receive some value, please share this episode with them. We want to pick up the entire industry, help serve the entire industry of network marketing. We believe that when other network marketers win, we all win. So on top of that, if you'd like to check out some of our free trainings, you can go to allinnetworker.com. Otherwise, please just rate, subscribe to this episode, this podcast, wherever you listen to podcasts. We'd greatly appreciate it. And until next time, thanks a lot.